What is going on, everyone? Welcome to the very first video in this educational series. This is the trading blueprint. This is what I use, this is what I do, and what I found success with. In this video we're going to be talking about very basic stuff. The first thing everyone should look at when they start trading, and that is liquidity. So the only way to really learn it is jumping straight into the charts and seeing examples. So let me make myself a little smaller here. So what is liquidity? Liquidity, in the most basic way I can explain it, are the highs and lows. So looking from back here, where the most, like in this region, where the most recent highs and lows, you have this high, and you have this low. So anything above here is where traders are ideally going to have their stops, where retail traders are going to have their stops. So on the other end, anything below here is you're going to see people going long will have their stop losses. So the reason I'm marking these out is market makers love to take out these levels before moving in an initial direction. So just a quick example here. If you're planning on going short here, your stops are going to probably be at the most recent high. So what do we have happen here? These highs get taken out, buy side liquidity gets hit. A lot of stop orders are filled. As you can see, we're not really moving that much higher here. We're just wicking around before moving back down. So what this does is it traps out retail traders, stops them out, and the market makers will move this in the original direction. In this case, there is a very large wick here, so I'd move sell side to wherever the most recent swing low is. So in this case, it's right here, not the wick. So in that case, the people who are going long are not wrong, but what you can see happen is they have their stop losses set here at this low. It gets taken out, and what happens? We move right back to buy side. So the way I like to see it is price uses this as a magnet. So once one gets hit, the other is going to get hit. Moving on from that, those are the major highs and lows, but that is applicable on these lower time frames. So looking at this right here, we have this high, and we have this low that was made here after this low. So what would this signify? This would signify that buy side. So anyone who wants to go short here, have their stop set up here, and what happens? It gets hit, stops them out, rinses back down. And what does it rinse back down to? It rinses back down to that sell side liquidity. So all it is market makers using these different levels to stop out traders, collect orders, increase their position sizes, and move it in the original direction that they want it to. So let's take a look at more examples here. So this is market open right here. So we can say that this is a low. So what would that be? That would be the sell side. The high, so that's buy side. And just like I was showing you before, what's up here? All the buy stops are up here. And what's down here? All the sell stops are down here. So anyone setting their stop losses here are planning to go long. So what do they have to do? Their buy orders get sold, so that's sell side liquidity. Same thing up here. Someone wanting to go short here would set their stop loss at that high. What happens? They get that high swept, their sell orders get bought, because you're selling the market. When you're exiting your position, you're buying it back. So this is why we call it buy side liquidity. So these buy orders get hit and takes out retail traders and then moves it in the original direction. So in my videos, when you watch me trade, you're gonna hear me say minor and major, so or a draw on liquidity. Anytime I say that, it's just a point of interest where I see a high or low that's being made. So in this case, people who are going long here have their stop losses set here. So what ends up happening, we swip out these orders, move right back up. So again, looking back at this is pre-market session. That's pre-market high. That's a pre-market liquidity zone. What's up here? So anyone who was going short here got stopped out, and what happened? Market makers moved it in their original direction. What direction was that? This draw on liquidity. So the most recent low that was made before moving back up. It came down into it and it hit it. So that is liquidity 101. Very, very basic. It's not too hard to understand. If you guys are confused, let me know if you want me to clarify it anyway better. It's just the highs and the lows. You guys may see it as support and resistance, but the way I see it, it's not support and resistance. It's where stop losses are set, and it's where market makers are pushing price to before moving it in their original direction. So this is the first video of the educational series. I don't want to take too much time on this, but I hope you guys found something of use here. I hope it's helpful. Again, this is video 1, so in the next video we'll be talking about equal highs and equal lows, which is in line with liquidity. So do some homework. The homework for you guys is to go in and do your own examples like this, so you can see these highs and lows getting taken out before moving in another direction. So for example, we have this high here, price comes up into it, and then goes in the complete other direction. I want you to find a couple examples like that. So thank you guys for watching. Leave a like, subscribe, share with your friends, and be patient, be humble.